Ascendis Health is a health and care brands company operating in plant, animal and human health. And Paul, the humans are still buying the products for the animals and the plants.
Yeah, and the plants. I forgot the plants earlier. Plant condition is very important. But remember, this one is a group which was brought into being and has a controlling shareholder in the form of a private equity group called Coast to Coast. But they've basically hoovered up all sorts of business, and they're very strong also in that nutraceuticals category.
Market cap 10.8 billion rand, PE here of 27, and after the maiden dividend now has a yield of around 0.8%.
Yep, it's now in dividend paying mode, and it's done extremely well, and it has got a corporate bond program going, and it's buying businesses in Europe, and it's really
the bond was 300% oversubscribed, and so market rewarding this.
And it's now bigger than Adcock Ingram.
From a market cap
perspective.
Let's have a look at the share price graph just to give context to our
this
conversation.
Will probably be a 3-year chart because we haven't got the 5, and it's trading at 25 rands a share, so it's done really nicely.
And this is despite a rights issue earlier this year.
Exactly, and the rights issue was 300%.
Oh yes, the rights issue, of course.
And that's because they did a placement at the same time as doing a generalized rights issue, so they were able to fill some additional stock demand.
Yeah, but this one is, I mean, we've interviewed Carsten Wellner. His energy is quite electric, and he's driving a very aggressive growth story here.
Yes, and I mean they even restructured the entire kind of management core to give him a little bit more time to focus on offshore acquisitions, and he's done just that. I mean, they've made 3 big offshore acquisitions over the last few months. The most recent being another sports nutrition business in Europe, and then also Remedica, which specializes in these kind of vital medications like malaria medication and antibiotics and everything. So they're just kind of doing bolt-on acquisitions that will fit well into the South African businesses, but that have more of an exposure offshore.
Did you get in early into the Ascendis story?
Well, so from if we look at the mid-cap and small-cap space where this thing played when it started listing, we really liked it for the private client market. I mean, these guys, they love good stories like this. So when they listed, we said, listen, this looks like a really good story. Unfortunately, it's a little bit too small to put into portfolios, or it was a little bit too small to put into portfolios at the time.
I think you're probably revising that now, given that it's the second largest.
Well, it's definitely something. It's definitely a company that's come onto the radar for portfolios now. It didn't used to be, but it definitely is up there now.
Well, we've held this one and we've done well.
I think we bought them into this portfolio in a very small way when they were at about 17 rands a share, so now 25. They look pretty good, but we substantially increased the allocation to it when we had a discussion about the local farmers. Yeah. So
anything else to add before we call it?
Yeah, I mean, this is just a really interesting company, well diversified across products, and now also becoming more diversified internationally. The PE is pretty high, but I mean, you're gonna get exponential growth out of this thing over the next few years, so it completely justifies the rating.
Let's call it, Paul.
Yep, hot for me.
Hot?
Oh yes.
You sound very hot on Ascendis.